Hello and welcome to Adjusting Entries. Today's topic is equipment, depreciation expense, and accumulated depreciation. I'm Kia and this is my disclaimer and copyright notice. This presentation is copyright 2019 by me. Please share this presentation and share links to this presentation on an unmodified basis. So when we're purchasing equipment, that equipment is an asset. Once I start using the asset, I need to record that cost or the use of that equipment, and I do that through depreciation expense. However, we do not directly credit property, plant, and equipment. Rather, we use a contra asset account known as accumulated depreciation. We do the following to calculate depreciation expense using the straight line method. We take our acquisition cost minus salvage value over estimated useful life, and that will give us the depreciation expense per year. The acquisition cost, that's the total cost that we paid out to acquire the property, plant, and equipment. Salvage value, that's the amount that we expect to receive at the end of the useful life of the asset. Estimated useful life, that's the number of years or months that we expect to use the asset for. So let's look at an example to better understand this concept. On December 31st, 2019, Jason Company purchases equipment for $62,000 cash. The equipment is expected to last 5 years as a salvage value of $2,000 at the end of the equipment's useful life. Record depreciation expense as of December 31st, 2020. So when I'm buying this equipment, I'm going to be debiting equipment for $62,000 and crediting cash for $62,000. This is the initial entry for December 31st, 2019. Remember, when we're purchasing equipment, think about what's happening to cash. Ask yourself, is cash going up or going down? In this case, cash is going down, and I'm going to show that with a credit to cash. For every credit, I need a debit. So I'm going to be debiting equipment, and this is to record purchase of equipment for December 31st, 2019. Since I bought the equipment and put it into use, I need to record depreciation expense. So how do we determine the amount for depreciation expense? We use our formula for straight line depreciation. We take $62,000 of our acquisition cost minus $2,000 of salvage value over 5 years, and that will give us $12,000 depreciation expense per year. Now, remember, this is for 12 months since I have this asset from January 1st to December 31st. So this is going to be for the full year. Now, if I bought this asset on, for example, March 1st, I have to take this amount here and multiply it by 1012 from March 1st to December 31st. And that's 10 months out of 12. So I'm going to debit depreciation expense because I record expenses with a debit. I'm going to credit accumulated depreciation on the equipment, and that's for the amount of $12,000 that we just calculated. So when I'm showing my equipment with the cost of $62,000 less accumulated depreciation of $12,000, and that will give me equipment net of $50,000. I'm doing this only as a partial balance sheet. So note that accumulated depreciation account has a credit balance and therefore reduces property, plant, and equipment. Over the life of the asset, meaning at the end of December 31st, 24, the equipment net is $2,000, or in other words, the salvage value. So let's look at that. So this is the T account for accumulated depreciation, and since I'm using straight line method, that means my depreciation is going to be the same for years over year. And I'm doing this for 5 years, so I'm doing it from 2020 to 2024. And every year I'm depreciating $12,000. It means at the end of December 31st, 24, my accumulated depreciation is $60,000. So when I'm showing property, plant, and equipment on the balance sheet as of December 31st, 2024, my equipment, $62,000, minus my accumulated depreciation, which is $60,000, will give me the equipment net of $2,000, which is my salvage value. And I know I did this right because I did not go over the salvage. I did not depreciate over salvage value. This is where I stop. I stop at the 5th year when I reach my salvage value. And this is it for today. Thank you for watching. Don't forget to like and subscribe.